Sorry about that. Thank you, Mike. I didn't realize that my mic was actually on. So let me quickly go through that again. Apologies. Welcome to Admiral Markets. My name is Chris. This is the strategy webinar. We have that on Wednesdays. We look at, on every Wednesday, look at the same strategy. And on Tuesdays and Thursdays, we have just normal sessions, live webinar sessions, where we look at particular, let's say, particular setups. And, you know, depending on the technical analysis. I see all kind of warning signs now from the organizers, in fact, that I was muted, but totally didn't see that. So that is our focus on Wednesdays. Tuesdays and Thursdays are a bit different. We focus on, for instance, trend lines and moving averages, etc. Wednesdays will always focus on strategy, one particular strategy. This disclaimer, quickly explain that online educational materials are developed by Admiral Markets for a global audience. Please take into account that that info may not be suitable for everyone. To get the corresponding information on charting conditions and other details, please visit admiralmarketsglobal.com, select your country of residence, and contact an appropriate entity. So that's the first disclaimer that we want to point out. The second disclaimer explains that the risk involved, the risks in trading for exchange and global financial markets, is considered very high risk and may not be suitable for all investors. Please seek the advice of an independent financial advisor for more information on that, and this webinar is for educational purposes only. By continuing watching this webinar, by continuing watching this webinar, indeed, you are agreeing with the disclaimer and the content mentioned here. So thank you for your attention. So what I was saying before I noticed that I was muted by myself is the fact that we usually look at this slide as a checklist, what kind of things we want to look at or what things I want to look at before entering. I want to make sure that these things are aligned to my strategy. The market and strategy are in sync with each other. This is still valid, but primarily because we're specifically looking at one strategy, some PowerPoint explanation giving more feedback on the strategy. So the trend is defined by the 21 and 34 EMA basically being in the same direction, either green or both being red. Green obviously being the uptrend, red obviously being the downtrend. The opportunity occurs when both are aligned to one direction. Not only do they have the same color, but the 21 is above the 34 or the 21 is below the 34. Filters means that we're not trading it with news events, major red tag news events, major impact, high impact news events. Price has support or resistance close by, like a daily high or low, like a daily top or bottom, like a daily pivot point, or an L3H3. The trigger is basically price clearing support or resistance and creating sufficient R2R space and looking at some currency correlation potentials that might block the trade as well. The entry could be the break of the fractal or the retest after the break. Trade management is basically trail stop loss by 6 pips each bottom for upside or each top for downside. Make sure to take a look at Admiral Markets and social media. Today, regarding the risk calendar or economic calendar, we have pound retail sales and pound MPC meeting minutes. So the pound is definitely at risk at the moment because of that news event. We also have FOMC meeting minutes later today and Fed Chairman Yellen speaking. So two big things coming up today. With that said, let's take a look at our euro dollar. Let me quickly change the template though. Sorry about that. I was using a different template. That'll just take a few seconds. The euro dollar, as we can see, looking though like it's making that head and shoulders, that inverted head and shoulders that we talked about yesterday, remember? The left shoulder and the right shoulder here. Seems like price is indeed respecting that left shoulder level and is bouncing up. So the bullishness indeed that we potentially saw maybe getting some legs in today's start of the price action or start of the trading day. There we are. So this is what I was talking about yesterday, right? This potential head and shoulders. Now, the right shoulder is getting a bit bigger than the left shoulder, but in any case, irrespective of the fact if it's head and shoulders or not, or inverted head and shoulders to be precise, we do have a resistance line right here that's very neat. That's a good position trade. If we break that, swing traders might be interested in taking a trade to the upside here and giving a swing to the upside with a target somewhere about 139 here, which is probably a fib. Let's take a look. Put this fib here like that. Yeah, we got a 786 at 139, 20-ish, roughly 139.19. All right, so could be a position trade with the stop loss just below this bottom, entry just above this top. That could be a swing trade with a target right at 139. For intraday traders, let's take a look. That's a 1 hour setup. 4 hour setup, you can see why that's an important level. It's a break of these 4 or 5 tops, basically. 5 fractals we have there, triple top, and 5 fractals. So that's very interesting. And would be a potential. Now, you don't have to take an entry order right there. If price pushes through it, you can place a fib from bottom to top and wait for price to get back to the 50 or 61.8 fib or 38.2 fib and take it from there for the upside. That's another method of taking that trade, by the way. But anyhow, I'm diverting because I should actually be looking at a strategy. It's just natural. Sorry. It's just almost like an automated, almost like automatic for me just to analyze the currency together with you here. I forget that we're actually focused on one particular strategy. But let me just finish this particular pair because I started it already, our usual analysis. But that's another way of doing that. You, of course, have multiple entry potentials. Depending on your preference, one could wait for the break and pull back and go before trading that. Now let's go to our strategy. It's on the 15-minute chart, in fact. What are we looking for? Well, we broke the H3. We have the pivot point below us. We have green moving averages, and they're aligned on each other or above each other. So that's all good to go. So what we're looking for is the break of a fractal. And the break of the fractal already occurred, didn't it? The break happened here or here. And one could have taken that break, or there's hook back here. Let me zoom in a bit. Right here. Could have been a long entry then on the euro dollar, although the H3 wasn't broken as yet, actually. So in that case, a long entry could have been at the H3 short. Not that, forget what I said actually. It wasn't valid. I forgot that the H3 wasn't broken. Now the H3 is broken, so sorry. This was actually still not a setup because it was too close to the H3. Revise that. Here it was a setup because we had price respecting the H3, moving down, and then breaking through it. So that could have been an entry on the euro dollar. It could still be an entry actually at 137.10. It's just a few pips down from here for the upside. Stop loss would be at 137.04. So yeah, let's say 137.03. So the entry could be still at 137.10. So I'll put an entry order there. Let me see if we missed anything regarding our strategy, but I don't think so. Now the pound news could influence the euro a bit too, of course. That's something we have to be aware of. But the pound news is still 1.5 hours from now. So this is breaking pretty strongly, so we might not get the retrace, unfortunately. Price is continuing pretty good momentum. Let's see if we get the hook back or not. This could have and should have been the entry. However, we didn't have a trading webinar starting at the point of the break. That can happen sometimes, obviously. So the question is, will we get the hook back? But if it does, I think it's still worth the trade, unless we, of course, get a new 50-minute fractal that's above this level. Then the entry order would be invalidated because the trail stop loss would kick in, and the trail stop loss would be above the entry. As long as there's no trail stop loss that is above the entry in this case, the entry could always still be taken in the future. The same entry. I hope I'm clear. Right? This was the entry in the past. However, we were not behind the charts at that point when we were looking at it. So the only thing we can do is still put a pending order at that level that we could have entered. If price gets there, fine. If price doesn't get there and makes a retrace, then bounces up at a higher spot but doesn't take us in, then according to the trading rules of the strategy, the trail stop loss would be above or at the entry level, and then of course the entry spot is not valid anymore. I'm not a big fan in any case of taking early breaks. I like to trade this strategy, particular strategy, a bit more in the second part of London and New York, just because of the euro and pound dollar. They like to make some spikes. So typically, especially the pound dollar, but this is looking like a lot of momentum, so it could be worth it. 137.12. Stop loss at 137.13. 03, sorry. That's what I'm doing right now. Now actually, the stop loss upon the break here was at, yeah, 05, that's correct. Yeah, that's good, okay. Florian, I speak a bit of Czech, but that doesn't look like Czech to me. And I speak Dutch, but this doesn't seem familiar to me. So I don't know. Is there a way you can translate it into English, preferably English, I guess? Ah, great. On the daily chart is retracement and then an increase. Let's take a look. On the daily chart is an increase. On the daily chart is retracement, sorry. Yeah, this could be a retracement indeed. Although it's a very momentum retracement, there's a lot of power in there. It could still be back to support that we have here. These supports in here. There's that uptrend channel still roughly in play, and we're relatively at the bottom of it. Also, we have a big wick here, which could be still that pin bar. That pin bar, that wick, could have been retraced forward at upside. So there are good reasons to see that this is a potential bouncing spot, just like this was a bouncing spot, 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 this was a all these are bouncing spots still for more upside, although the upside is going slow. If we connect these lines here, yes, there is a big resistance. But definitely, I agree with you. We looked at that yesterday too and said, okay, this is actually potential for that upside to bounce. The break, the confirmation of the break would be above these tops as a swing trader. As an intraday trader, we can try to position ourselves earlier. We have a very bullish candle. We have an entry, or I have an entry right now, about halfway to bullish candle, in fact, based on this strategy. On the 50-minute chart. For swing traders, if you're not trading intraday, you know it would be wise to wait for the break of the hourly tops here. Let me put a red line there, and either take it upon that break, or as I said, let it break and place a fib on this breakout and take it at the same level, roughly, but then at the fib. So as a swing trader, you would be taking a fib hook back for more upside, and that would be indeed the increase that Florian is talking about, the continuation of this momentum to the upside. So back to the 15, pretty strong downside. Let's see how that reacts. especially a strategy like this is highly dependent on a number of, it's not a not a discretionary trading system. It's has clear rules, so it's more mechanical. Mechanicals are always more about implementing and finding, of course, implementing correctly and finding enough opportunities to have a statistical edge, right? So let's see this trade, whether this trade then pans out. If it takes too long, we can always close it out because we do have a news event on the pound, and although this is the euro dollar, it could have its impact as well on this pair if the pound moves a lot in one or the other direction. So we can be a bit more, usually speaking, we would want to trail stop each new fractal by 6 pips. That is the standard, but if we want to throw in a bit of a discretionary trade management mix to it, in this case, keeping a close eye on it the next hour to see if we want to stay in it wouldn't hurt, I think, from a discretionary point of view. Let me check if I'm in that trade, in fact. Yes, I am. Wasn't sure. So let's see. We can even go to the 5-minute chart to see what's happening here. Hit the H4 now, kind of hooking back to the H3, and hopefully broken resistance will become support. So fingers crossed, I guess, and let's move to the pound dollar. So it hasn't broken the H3 left. Sorry, it has the H3 left. It hasn't broken it as yet. Basically, that's the main difference. Plus, we have a pound news, so we don't have to focus on this one. Euro pound pivot right here. Still, H3 and L3 are in play. We're looking for breakouts. If you're looking for, let's say, looking for reversal setups, then maybe a short here would make sense at the H3. But I don't know. Looking at the pound and the euro, that would be not matching up, in fact, that much. Just we have positive moving averages here. We did have a lot of momentum to the downside. That's true. This is the hourly chart. Difficult to say. We have some divergence between these bottoms. Yeah, I'm not a big fan of the euro pound anyhow, so I'll leave it be for the moment. AUD certainly made a bit more downside actually than I anticipated, but that happened primarily in the Asian session today. Yesterday, some small downside still, but it was more sideways or just slant down, maybe like this, to be precise. So the bounce didn't happen. Obviously, if you took the bounce, the risk is very small. So it will be well compensated if the trade does work out next time. That's the advantage of taking bounce trades like that, because the risk is just a few pips. If the other way of doing that is waiting for a fractal on the hourly chart to break, for instance, that would be a bit less risky because you can see that price is still continuing with its lower lows and lower highs on this hourly chart. And we didn't have a break of the hourly fractal, so then you would have avoided a trade like that. We do have a fractal here, by the way, at 92.40. So that could be maybe a breaking spot for more upside. In any case, if we look at our 15-minute strategy, we bounce off the L3. We have bearish moving averages. But if we break that fractal, we're bumping into the resistance pretty soon. And we have flat moving averages. To be honest, the L3 here is not really a big problem because our stop loss would be even smaller than the space to L3. So that's okay. It's not a problem. The problem is here that the moving averages are flat, and that's not what we're looking for. We're looking for momentum. Like the euro dollar has momentum. You see these moving averages? They're bullish and they're being torn apart. Same here, in fact. It's a slow start. Very slow start at first, but there is some momentum here. That's kind of what the strategy is out for. The strategy is trying to capitalize on momentum moves, not if price is going sideways. So this is, although it's kind of like a breakout strategy, typical breakout strategies would be waiting for consolidation before trading it. This strategy is also a breakout strategy, but it doesn't want consolidation. It wants to have price moving. It doesn't want price to be standing still. It wants price to be in motion so that you kind of can jump on board and see the trade develop quickly. So the Aussie would not qualify with the trend. The trend is not in play here, or the momentum. Kiwi. Well, you can see we had very big falls here. And there were methods on capitalizing on this fall. Now this one, this first break here, by the way, was not a setup because we didn't have the moving averages really in a momentum outburst. But that's different here, and that's different here, and that's different here, and it's also even different here. Those do have that. So all those blue circles would be momentum trades. This one would actually be a breakout of consolidation, not a breakout of a trending mode. So it's a subtle difference, but it is an important difference. And of course, how we interpret the definitions of what is a breakout and what is trending and what is consolidation will vary from trader to trader, and everyone will see it a bit differently, believe me. There's so many variations possible, but maybe you'll see at least how or why I look at it this way. A bigger consolidation is something like this. This is a contracting triangle where we have those purple lines, right? Price is substantially pausing on this 50-minute chart, making a lot of ups and downs. For an intraday sessions, I mean, this is all the way from Friday up to including Monday, right? It's a big part of price action. If price breaks out of that, that's a breakout, classical breakout. This breakout worked well, but sometimes these breakouts are riskier because price breaks, it's a false break, and gets back into the consolidation. That's why this strategy is trying to skip this one and trying to focus on the moves. This is the theoretical concept behind the rules, okay? So understanding the rules is one thing. Understanding why those rules are there and understanding what the spirit and thought of the strategy is also important, so that you can maybe read through the lines of the rules even more so and understand better what type of environment to look for. And after the break, this is the break pullback. Basically, it's looking for the continue and the continue and the continue here, right? Where things are trending, the moving averages are being torn apart, and we keep on breaking. This is the trending. This is basically the trending mode here. Price is trending to the downside, or there's a momentum to the downside, better said. And we're trying to capitalize, or I'm trying to capitalize on the snowball effect here of that downside. Now, eventually, of course, you want to stop with that. I mean, if eventually the fifth break of this is there going to be some divergence, for instance, here, and you want to be careful. So MJ is asking how about the AO? How would you interpret that? That would be one way of doing that. If you scale in and scale out all these setups here, that's fine. But at a certain point, you want to stop with that, and you don't want to continue doing that. Why? Because eventually there's going to be divergence, and the likelihood of the next break working out is going to decrease with divergence. When is divergence in play? We need AO to go back to the zero line and then make divergence. So that means that this particular break in here is divergence. So therefore, this one would not count. The break in here would not count. And you can see, justfully so, because price didn't go anywhere with that break, did it? It's actually retracing up. And for the first time since this moved down here, oh, sorry. Since this moved down here, the moving averages are green, right, for the first time. Otherwise, they were always red. Oh, there was a bit of green here, but both of them green. So that's how the AO would filter out. Maybe I should add that, in fact, to filters. One second. Alrighty. So that is the spirit, the goal of the strategy, and that's why this one will be filtered out. That's why this one will be filtered out, and that's why this break, this break, this break, would be good. Now, mind you that the entry would only be valid if the previous entry is actually taken out. So this is a good break. The previous entry is still in place. So this is not actually an entry officially according to the rules. One could take it, would have worked out fine, I guess. But usually speaking, I only trade it on one entry, and I just write it down. That is what I've tested the most, what I've used the most. But sometimes I do scale in extra at certain spots, especially if price is here and maybe here, for instance. I would do it quicker at these two spots than more down below here. I would, because then I know that price is getting into more of a bouncing spot already. So let's see how much upbeat this Kiwi can go, but for the moment it's not in our scope. But there could be some retracements, but it's not, this strategy is not focused on that. Alrighty, I'm just sipping some tea here, so hope you don't mind. We have the dollar CAD here. It's basically at the pivot point now, still above it, so there's still more bullishness in it, right? Because it's above the pivot, it's above the long-term moving averages as well, above the green here, dark green, and above the blue one. So, but we are waiting for moving averages to be aligned. Despite the fact that we're in bullish territory, the 21 and 34 are what? They're red. This doesn't match up. Despite the fact that we're in bullish territory, I mean, I can see why maybe some people would be looking for a bounce here to the upside. Maybe, I don't know. I would look at other time frames to analyze that. But the point is that we're trying to trade with the momentum. So it will be only to the downside because the moving averages are red, right? But we don't want to trade it to the downside because we're still in bullish territory. So no, it doesn't match up, if you see what I mean. Nothing doesn't add up here. The upside here could have been interesting. I'm not sure exactly where the pivot point levels were yesterday, but you can see that the moving average was nicely green, nicely aligned, and there was a good ride up, right? Good ride up to the upside, all the way from Monday to Tuesday, or this morning, in fact. One upside. A lot of ups and downs, but still upside. Dollar Swiss is same like the euro dollar, in fact, just the opposite. So we can skip it because it's highly how do you say it? Highly correlated is the word. Sorry, I was looking for. So we can take a look at the euro dollar just out of curiosity, and we see a big wick. We still are patient though, or I'm still patient. At one point we were up 12 pips. So it is going our way. I like that. That's the good thing about it, that the price never hit our entry order and never saw back, or never went back to the level, just went up and up and up. Getting now some smaller rejection, but mind you, this is a 5-minute chart. The key here is, let's see, we're up 12 pips. Our risk, or my risk, was 7, so that's already 1.5 to 1 R2R, but that's not really the point. For me, it's waiting for, although if we're up that much, then we can put on the parabolic effect. Not that the number of pips is up a lot, but it just started, in fact, so that doesn't help much. Well, let's keep an eye on it. For the moment, we still have 12 minutes before this 50-minute candle is finished. But if the 50-minute candle were to close something like this, I might move it to break even because that doesn't look like a good price action signal. Plus, with the news, I want to be a bit more aggressive. But technically speaking, the trade management would use a trail stop loss of each bottom, so of each 15-minute fractal. So we would have to wait for that officially, but unofficially we know that, or officially we know that there's a news event. So being a bit more aggressive with on the watch out if this trade indeed progresses is, I think, wise. So let's see. Dollar yen breaking to the downside. Wow. Interesting. And it looks like we have a break of this yen here, looking more and more bearish now that price is pushing through this blue level and this blue level, this red level, is approaching this red level. Very interesting. Maybe some downside here finally on the yen. Took a very, very long time to play out, but could be now finally in motion. Wow, interesting. So anyhow, what do we have here on the 50-minute chart? Here the moving averages were flat, weren't they? But at this point, they started to trend, right? After here, after this last downside here and a hook back. So this break of this fractal was an entry. The L3 was out. That could have been an entry right there at 101.10. And this trade is up 20 pips, was up 30. Now, considering the fact that there's no fractal that is below or at the entry, an entry order could still be at that same level, force short to the downside with a stop loss at the original stop loss place, which is right here at 101.23. For a 13 pip stop loss approximately. So that would still be in play. This breakout to the downside. And the L4 is basically saying the same, isn't it? L4 short breakout. So that is one way of trading the Camarilla like that. The moving averages are in that way supporting the fact that we're pushing through this L4. And indeed, we got a good break. And let's see if we hook back to the L4 for more downside. The next target could be the S3, for instance. S3 is lined up with the bigger weekly and monthly support at 173. Now, if we get a fractal, if price moves up like this, and then down again, and we get a fractal here, then the entry order has to be deleted. Because the chill stop basically is at or below the entry order, the entry spot, sorry. Pound yen is not tradable because of the news event, but in theory, without the news event, would have been a setup as well on the break of this fractal. The euro yen, in fact, too, to the downside, also set up for downside break. Actually, this is also a breakout, in fact, of this trend line, and the whole pattern is starting to look like kind of like a descending wedge. The odd yen would be the same story, in fact. Break of these bottoms right in here and the L3. Could still put a pending order there. Euro odd continued throughout the Asian session a lot too. Yesterday inched up a bit, but nothing spectacular. But didn't get the retracement, not a bigger retracement at least. And these moving averages, as you can see, have been pointing to the upside. These momentum moving averages, 21 and 34 EMA, have been pointed to the upside ever since Monday and have remained so. A lot of momentum to the upside. Now let me check if an order is still valid for this pair. We would have to have been taken out on the old order, which we have. Divergence is not in play here because price has not returned to the zero line, in fact. It's still above the zero line and it remained above the zero line, even here at this spot. So the euro odd actually could be an interesting one as well. So there are a lot of potentials today. Let's take a look at which one was the best one. Maybe because the euro, let's see, how's the odd USD doing? One more time. Odd USD is still continuing, although it's flat. Maybe the odd yen could be interesting because of the fact that it still has some space to the downside here. Plus, the yen is moving down, and the Aussie is weakening. So this seems to be an interesting combination, I would say. See, the euro yen, the euro dollar is moving up. So I like the odd yen here in this case. So pending order, unfortunately, we just missed the break here, but the odd yen makes sense, the best sense probably, at this breakout level. Let's zoom in. The low here is at 93.35.7. That means 93.32. $93.32. Stop loss has to be just because this moving average is very close to this top here. We can go to 93.55, or I will go. All right, there it is. Despite the big fall, there is no divergence as yet. We almost hit the zero line here. I mean, if you consider that the zero line hit, then we do have a bit of divergence, but especially if a currency is still growing in its AO like this, then we want to be still open to more downside, especially if the hourly is not having divergence. See, the 50-minute chart is such that sometimes you get double divergence before you get a bigger retracement. The question is if this one really retraced to the zero line. It's very close though, that's without doubt. But the thing I like about this one is, this particular entry is that it's true that maybe we have divergence between, if this is to the zero line, which I still don't think it is, but even if it were, we might have divergence between this bottom here then, in that case, these bottoms and these bottoms. However, price is now accelerating to the downside and is tearing this AO in a rapid speed to the downside. that's one of the things that, therefore, I don't mind about this downside. This particular break, maybe in here, where I have the blue one. Let me do it again. Here, this break maybe. Let's see. Where do we have it? I lost my orientation. This break here would be riskier in my opinion, because then we're just about to build divergence. And then we can expect some choppiness. But now that we had the choppiness, and we're accelerating away with even more momentum here, I think that risk is a bit less now. So let's see when it, if and when it makes the hook back. EuroCAD is right at the H3, not so interesting. Pound CAD also going sideways at the moment. How about the Euro New Zealand? It too had a good ride up, but it is at resistance. Pound New Zealand had a good ride up, but it is at resistance. So here we have the classical dilemmas in these four pairs where price is in an up momentum, but it's kind of dying and it's fighting to break above it, but hasn't. And we're not trading it to the downside because the momentum is still up. And in these cases, the trend is up too. The trend is, for instance, this moving average and this moving average. If they're aligned and pointed to the same side, that's the trend. Not very important in this strategy. It's more about momentum. Alrighty, that's it regarding all the pairs that I usually look at. So let's see, there's a bit of a wick, but I'm willing to say that that's a retracement. I think moving it maybe to break even wouldn't hurt though in the meantime. Or just below this 5-minute fractal at 137, 137.09. That's discretionary. It's not part of the strategy officially. It's just because there's a news event and there is a 5-minute bottom here. Now the risk is just a couple of pips. Yen is moving up a bit, just a few more pips. So that's the usual strategy on the 15. We still have some time left. It went pretty fast today. So maybe we could take a look at the idea on an hourly chart, which we didn't do last week. If you have questions, of course, I'm all ears and you can reach me through the chat. Otherwise, let's take a look at, for instance, this Euro odd 1 hour chart. This trade can also be used on the swing trade. What we're looking for is momentum, not for a trend necessarily. We don't care much about a trend in the sense that it could be maybe for informational purposes, but we're more interested in trading with the momentum. Oh, Vikantas is saying I can move the stop loss with the mouse. Yeah, I never do that indeed. I like to change the numbers. I guess I don't trust my mouse skills too much. This is a momentum of the Euro odd 2, and basically it shows where price is above it, the moving averages are aligned, and there's a growing gap between them. This one is actually a classical example of that. We have a fractal here and growing moving averages and just momentum. It's a perfect example of a breakout with the trend, with the momentum, I should say, to the upside. And if we trail stop each fractal by 15 pips, where's our stop loss right now in the Euro odd? Right here. What did we lock in? 110 pips. What was our original risk? If we put the stop loss, as the strategy says, at the 34 EMA, then the stop loss was 40 pips. Locked in 110 at the moment, which means close to 3-to-1 locked in already. And the trade is still open. So this is a very good swing trade, in fact, obviously. It shows the idea about trading with momentum. Now, some of you might be thinking about this one as well, and it is possible to have taken that one. It would have worked out okay, but it's a bit riskier one. Just like this one is a bit riskier too. This one would not have done too well. This could have been a loss if someone would have taken this one. Personally, from a discretionary point of view, I doubt that I would ever take this one, but you never know. If it is, then it's a loss. What can you do? But in any case, the +3 here would compensate that -1, right? So it's not that big of a deal either, I guess. Losses are part of the deal, part of trading, and part of making profits, and that's just no way of avoiding that. Actually, the R2R is just a tad less because the entry is actually a few pips above it. Sorry about that. But the difference is not much. It's a 45 risk, so it's about a 2.5 to 1. 2.5 to 1. Let's continue. Let's take a look at all the time frames here. Let me try to move it here, see if my skills are working well. Apparently it doesn't allow me to do it. It is easier indeed. So I moved it to 137.10. Hope I don't make any mouse mistakes in the future, but otherwise Vikantas is not just kidding, Vikantas. So I just tightened up a bit, one more pip. Now it's only 2 pips risk. 1 hour chart. What we're looking for is momentum. This doesn't have momentum, it's just going sideways. Pound dollar. Looking for momentum. And in fact, if we look at the pound dollar, then that would be a breakout trade right there. Of course, we have the pound news, right? But this would be a breakout trade right there with momentum. There is that momentum here. Odd USD. This would be the breakout trade. And after that, we don't really have a pause that we can trade it. So although we had a lot of momentum, there was no fractal to trade it. So that would be a pity. Unfortunately, the Kiwi is a different example. Kiwi, we did have momentum and was tradable on the hourly too. It's the same as the 50-minute chart though. So in this case, the 50-minute world and the hourly match up. In this case, we would have an entry potential right here with a stop loss above here, and the trail stop loss would be 15 pips above this top at 84, and we'd still be in this trade. Not much locked in, only 35 pips. The risk was about 17 though. So it looks like about 1.5 to 1 at the moment. we can keep an eye on this strategy on Tuesdays and Thursdays too, not only Wednesdays, so that because sometimes, obviously, if we want to look at it on Wednesdays, it's going to be, we might miss some things because it's only one time frame we're looking at it. Dollar CAD. Well, but still, yeah, it's, I don't know, not, could be maybe above these tops right in here. There is a big difference between these moving averages. A break of these fractals, for instance. I don't know, I'm not really a big fan of this dollar CAD, to be honest, but your dollar seems to be struggling at the moment. I think I'll just move it to break even because I don't think, this doesn't look like a formation that is ready to go. So, alrighty. If so, then great. If it still bounces, otherwise, it's taking too long. And this is more discretionary decision, though, as I already said. Let's continue with the dollar yen. Dollar yen hourly. Only looking at the momentum, would have had entries maybe here and here too. Not pound yen. Pound yen was flat. That wouldn't count. Euro yen, maybe in the past indeed. AUD yen would certainly have that. AUD yen would be already a trade since longer ago though, right? You can see the difference between the 50-minute chart. 50-minute chart, we got taken out somewhere in here, right? And would had to have re-entered the downside. The AUD yen basically was a setup with these momentum bars from, well, this was the breakout scenario right there. The momentum continuation trade was actually from here, wasn't it? The break of this fractal. With the stop loss right there. And if we trail stop every new 15-minute fractal, hourly fractal, our current trail stop would be all the way at 67. This would be the hourly setup, wouldn't it be? Almost 100 in profit, but less actually. About 90 with a stop loss of about 40, also 2-to-1 locked in. And the 50-minute chart here is actually a scale-in that regard, isn't it? As we can see on this AUD yen. Trying to capitalize on the last push, maybe one more push before we get too much divergence and we get a bigger retracement. And then probably we'll take out the trail stop losses on both the 15 and hourly. Good momentum here on this AUD yen. Let me see when that trade happened. Monday, the 19th. Okay. Euro AUD, same thing. Pound AUD 2. Pound New Zealand as well. The pound yen, we looked at it, but it was basically flat here. That's why I skipped it quickly, Bob. It is basically made a triangle like this. In fact, so that would not be part of the strategy. When it's making a triangle like that, it wouldn't be looking as such for a break. We could maybe have had an entry here when we had the moving average just torn a bit like that, like the other yens, but the momentum here was quite little. The moving averages had only a little bit of difference there. So this is a bit of an iffy entry, if I may say so, compared to the others. The others look better. Because this was flat, we would skip it, and we would look for trending mode again, basically. The breakout itself would not be interesting. We need to see enough momentum. Also, it has the news event, indeed. So this one was the least interesting. The others seem more interesting, like the ZAR yen. A lot of momentum. You see how big the gap is here between these moving averages? That aids the potential for a retrace and continuation as well, still, if we get it. Fortunately, the euro dollar is not doing that well. The odd yen would have been better, unfortunately. Looked at it just a tad too late. Let's see. What else? So you can see, unfortunately, though, for us, that the hourlies have all made their move, right? That's the, that's the, not the problem, but some things that you have with swing trading is that we'll just have to wait for a new setup, and that can take some time, obviously, right? With these particular pairs. So that's why it's good to look at multiple pairs. And regarding multiple pairs, we can actually say that don't forget to take a look at a webinar this Thursday, which discusses why trading trending pairs is crucial. That's this Thursday, by the way. So Thursday evening, join us tonight. Nenad is going to take a look at range bars, intraday strategy. And tomorrow we have this webinar again, of course. So let's take a look at all these pairs that we've looked at so far in the hourly have had their move, except the pound dollar recently broke. Otherwise, all the breaks were on Monday, Tuesday with this momentum strategy. This is the odd CAD. You can see how important momentum is. It comes into the market. Sometimes using the 34 EMA really gets close to be tested. Look at this one. Came to about right to the pip. So it's always good to go a few pips above the moving average. And this pullback we would have been survivable then. Was very close though in that case. Sometimes using the fractal therefore may be a bit less risky, but depends. I mean, I like the moving average because it gives a tighter stop loss. So odd-cat really falling a lot. This was a big trade here too, an entry here with a stop loss here and a trailer stop here would provide a lot of R2R, as we can see. About a 3.5 to 1 at the moment. Quite spectacular. On New Zealand. So you can see that this strategy does not only have potential on the 50-minute chart, but greatly on the hourly too. This is the odd New Zealand. Trying to get my grasp here of this pair. Looking at these 24, 21, and 34 EMA. Let's see. Yeah, this break, I'm looking for the first valid continuation, and this break would not have counted because the moving averages to the downside were not aligned. All right. This break would not have counted because there was not enough momentum here as yet. Here we didn't have a fractal. So really the first fractal that would be counted is this one. So the first break would have been here. And the stop loss would have had to be, one second, let me check. Would be here at the moving average, right? So that particular order is still in play. And an entry order back at this level could still be valid, in fact. Price is within reach to make a pullback maybe to that level for one more fall. I'm not a big fan of the odd New Zealand, but that's what the strategy would be saying. It's a short here still around 107.86, the stop loss at about 108.02 and with the trading stop for downside here on the odd New Zealand. So why not try that? As I said, I'm not really a big fan of the odd New Zealand, but 107.84, 108.03 as a stop loss. All right. Hot Swissy, lots of downside too. New Zealand Swissy, wrong template. 1 second. Lots of downside too. Cat Swissy. Retracement. Wrong template. 1 second. Question is if there's even there's actually momentum to the downside at the moment, and we just broke through a fractal. So in that regard, it could be even a breakout trade to the downside here on the Cat Swissy. Now, from a discretionary point of view, yeah, it might even make sense in a way because price is, for instance, at the minus 618 target or the minus 272 target, depending on how you fib it from here to here. So if some resistance makes sense, actually, on this Cat Swissy, we had a lot of upside, but that's the advantage of the strategy. It's a quick change when the momentum changes. It goes with the momentum, right? You might see an uptrend here, and there is an uptrend if you look at these moving averages, but they're for informational purposes only. We broke out of, from a discretionary point of view, we did break out of this uptrend channel in a way, didn't we? And the momentum is down. So there would be that downside potential. We don't know how far, but that's why we have that trill stop loss to reduce that risk. So it could be downside. I'm going to skip it, this one, personally. Because of the trend still. Let me show you this template. But it doesn't have to be skipped. Let me say it this way. Well, it's not much of a trend, in fact. Maybe I'm getting confused with the other one. So there was one particular pair that was trending. Maybe it was the New Zealand Swissy. 1 second. Nope. Which one was it? Which one was it? The Pound Swissy. Sorry. It's the Pound Swissy, probably. Yeah, the Pound Swissy was that's the one. The Pound Swissy is trending very nicely to the upside. Everything aligned. So that makes me a bit hesitant with trading Swiss franc strength. But of course, the CAD is different than the pound. The pound CAD is moving up, so that could match. Well, it's up to you. Not every opportunity needs to be taken automatically, so that's always something for every trader to decide. Theoretically, it would qualify. Let me say it this way. Yep, that's about it. So with that said, that is all of these pairs, in fact, except the pounds per C. 1 second. Pounds per C doesn't have the momentum. It's flat at the moment. If we look at this part, flat. Now, why would New Zealand Swiss C, for instance, not be an opportunity at the moment? Just to make crystal clear what the goal is of the trade. The goal is to catch 1 or 2 at the beginning, not more, right? And then write it down. So when we break this fractal, it wouldn't qualify because we're still, if anyone should have taken the trade, it should have been here, right? Here or here. Those would be the entries, not this, the fifth scale in, let's say. So that's why this would not be one. Although we have momentum, it would not be, I mean, it would not be one I would want to take because we have the AO already going back to the 0 line, which means that we're in basically in danger of getting some retracement. I will probably take out the stop loss and lock in the profit that we already had from this short. So it wouldn't be a good moment to scale in my opinion. That's the reason why many of these setups here, because price has already moved a lot and has already broken with these setups. So that's why I already said let's keep an eye on it on different time frames. On different sessions, because today is a day where, on the hourly at least, everything has moved already. The 50-minute world is different. On the 50-minute world, we see that there could have been some short-term scale-ins to catch the last piece probably, or maybe even a decent piece, but probably one of the last ones before you probably get some retracement, right? On the hourly, we can see those are not setups because the risk is too big. In the 15, we could still take a smaller stop loss that would justify that last piece, taking that last piece, right? So if you have those swing trades from Monday, let's say, going on, you even have profit in your pocket, right? To cover maybe some of these intraday scale-ins, for instance, if you want to look at it that way. You can also just treat them separately, obviously. It just doesn't have to be like that, but you get my point. At the moment, these swing trades are in their trade management phase. That's the point. But at least it shows you the potential. Not always will be that nice. There's were a lot of nice trades. Not always will they move so swiftly, but momentum is very important, as you can see here, to the upside. How about this one here? This upside, where would that would have been traded? Let's give me one more example of this New Zealand Swiss C here on this upside here. What would be the momentum break? Not this one, in my opinion. The moving average is too flat, so I wouldn't count this one. This one would be okay, right? We go into a big consolidation, but we do survive it. So the stop loss would be here. We trail stop 15 pips under the hourly bottom. So do we survive this pullback? Yes, we do, because it's only 7 pips. So we trail stop every 1 hour bottom. And despite the slower break, unfortunately, we get out at a horrible spot, despite the trail stop. That's sometimes unlucky. Right here at 78, which means we only locked in little pips, unfortunately. This is obviously a setup where we could have had more potential. Now, this is sometimes unlucky with the trail stop loss. There's nothing you can do about it, basically. Sorry, it's actually here. Excuse me. Because we didn't have a fractal that was higher, right? In this case, it was about 32 pips profit versus a risk of about 33. It's just 1-to-1. It's still not that bad. but we could have seen a lot of potential was left on the table. Never ever is an exit perfect though. That's just part of the game. Sometimes the exit strategy works perfect, sometimes it doesn't work as great. This one didn't work as great because we left a lot of profit potential on the table, but what can you do? Still 1-to-1. That's just part of the game. Sometimes though, if I see a burst like this and I do expect a bigger retracement or reversal, then using a tighter stop loss on a lower time frame to exit about here sometimes works great. But you run, of course, this in retrospect would have been a perfect exit. It depends from case to case. If I do see that this could be the last move up due to certain discretionary elements like price running into a big resistance, for instance, if the pound dollar is going up to 170, well, you might even want to take profit instead of using a trail stop loss, right? Hypothetically speaking, let's say for the fun of it that we would use a tighter trading stop loss after the break of these tops because we expect a bigger consolidation, right? How would that look like? On a 50-minute chart, actually would not be that much of a better exit. It would be right below this 50-minute fractal. Even on the 50-minute world, we wouldn't have had a fractal. So it depends how much you zoom in. Even on the 50-minute world, it's not perfect. The other method would be the parabolic, as you know, what is used potentially. And then let's take a look. The exit would be a bit better, would be here, 5 to 10 pips below, sorry, but there's some sound coming here, 1 second. 5 to 10 pips below this this parabolic, or on a 50-minute chart, it would be uh, 5 to 10 pips about here. That would have been the best one. Ah, wait, maybe I was at the wrong spot here. Let me check the dates because I think I was at the wrong spot. 15th of May. Sorry for this going back and forth. Actually, there was a 50-minute fractal right here. It's not that bad. 6 pips below it, 32 would have been exit here at 32. Or if we use the parabolic, the exit could have been at 43. Well, in any case, better than the hourly, obviously, right? Let's see, I got a question here from Rich, and then we'll wrap it up. I would like to start trading other pairs besides the dollar pair. Yeah, you can take a look at this part of the website, Admiral Markets Analytics Forex Quotes. Go to admiralmarkets.com, go to Analytics, click on Forex Quotes, and you'll see the difference. So that would be the way to find the spreads, Richard. And you can see on all of them the bid and ask there. Here you see a more interactive method though, which shows the exact difference as well, the spread difference there. That's visually a bit easier to look at. Any other questions? So if you try the strategy, try it of course on a demo to practice, and let me know how it's going. What obstacles do you see? What difficulties do you have? What things are going well? That way I can help you or give you some feedback or give you a round of applause, whatever. You can see in any case, I think, just by looking at these swing trades, the massive potential that the strategy has. Cuts losses short, lets winners run, and most of the trades are already up 1-to-1, 2-to-1, 3-to-1, and still open. Right? So that would have been a tremendous profit potential for this week. And well, you can count them already how much percent that could have been or is, depending how active you use the strategy. Well, we didn't talk about the hourly last week, unfortunately, so that's a bit of a pity. The dollar-yen review is basically 170 is a big support level. So there could be a bounce back up to test 101.10, 101.15, and then maybe one more downside. That's something that could happen. That would be the potential entry as well. With the stop loss just above it, tight above it here is something I'm looking for at 101.30 for the downside to 100.70. Of course, if price gets to 100.70, then the whole thing is invalidated, in fact. Or if there's a new fractal that is below or at the 101.80, 101.15, sorry. So there could be some more downside looking at the momentum until that support level. If the support level breaks, then a big thing is happening because we're breaking this monthly bottom, and there could be some weakness in the yen, a strength in the yen, excuse me, for the upcoming days and weeks maybe. Let's see. GU had a breakout trade to the upside, didn't it? Talked about it already prior to the news event. Interesting. Spiked up 50 pips already, and would have been a breakout trade, in fact, according to the rules of the strategy anyhow, were it not to have had that news event maybe. Although with the hourly, news events are less important, I believe, than on the 15. Breakout trade is doing pretty well. Alrighty, folks, I don't see any questions anymore, so thanks for joining. Thanks for spending your time here today, and we'll hope to see you with Nenet's webinar tonight and the other webinars tomorrow. Have a great day and good trading. Cheers.